Alright guys, in today's video I'm going to be going over my 3-day trading models, and this is pretty much my 3-day trading models. So a lot of people are going to be like, alright, most of these day trading models are pretty much the same, and yeah, they pretty are. You know, majority you just follow through with the liquidity sweep and a break and market structure shift, and then eventually, you know, they go their own separate ways. But if I'm being completely honest, I don't stick to one trading model, or I don't use like a have to follow the trading model. I use multiple concepts because I really know how to use multiple concepts, and like I just follow the order flow, and I already have my bias in the back of my mind, so I can just enter off of a certain concept or a certain couple of concepts that give me confirmation of the trade. I don't have to stick to a specific model, but if at times there is a specific model that plays or is panning out and I see it in real time, then I'll execute off the model. And of course, you know, they are just for a little bit more of a confirmation, and I have back tested them, and overall, you know, they are pretty good models, but majority of the time you have to focus on day of week, time of day, and where's the next draw on liquidity. And then all right, so we're gonna display our first, which is the 22 model. So I'm gonna display first the 22 model. Everybody knows it's pretty simple. All right, so this is what the 22 model looks like. So you're gonna have to wait for a liquidity sweep, and you get that right here. You get a sweep on liquidity. That could be your little sweep, and then eventually you're gonna wait for the market structure shift. So once you get that market structure shift right there, you're going to enter off of a fair value gap that is created or a breaker block, and then that is pretty much your entry confirmation. And then you have your stop at the most recent high. A lot of people can, or you can have it at the other one, or I recommend the other one. And then eventually you're gonna have to target external levels of liquidity, and you know, that is pretty much the trade. Of course, there's going to be better risk to rewards, and if you use the most recent high, you can use that because you already had a break in market structure and you catch the retracement. And if you want more confirmation, you can pretty much use OTE, and that would give you more of a confirmation as to where you can enter the trade. So this is the 22 model that I like using right here. So the next one is going to be SMT or silver bullet. Silver bullet is a specific time window that I like seeing a trade form. It could be a fair value gap. Majority of the time it is a fair value gap during the silver bullet hour. So for New York local time, it is basically 10 o'clock a.m. to 11 o'clock a.m. For London session, it is 3 o'clock to 4 o'clock. And then for the PM session, silver bullet starts from 2 to 3 again. During the silver bullet though, I like trading macros too. That's why I have sessions / macros before an SMT divergence occurs, and then I wait for the silver bullet, because there is macros before silver bullet, and that would be 8:20 to 8:30, and then 9:20 to 9:30, and then 9:50 to 10:10. That's when silver bullet starts, and that's my favorite macro, the 9:50 to 10:10 for sure. So this is what I usually try to look at whenever I have a SMT divergence, or whenever I have silver bullet hour. I try to find correlated markets like ES and NQ, or it can be the dollar index and Euro USD, or the dollar index and the Great British Pound in the USD. So that's kind of what I use SMT for, is correlation in the market, see which one is stronger or which one's weaker. And you can see ES here created a lower low, and then NQ created a lower low, and then ES created a higher low, which means ES was the stronger market and then NQ was the weaker one, and it's lacking in correlation there. And it's I try to, you know, use during silver bullet hour, or it could be during a macro. The macros are, let me mark them down right here. Alright guys, so for this clip I basically show you the unicorn model. Basically you have to wait for so it's a high low higher high, you have to wait for that purge in liquidity, and then you have to wait for that breaker market structure, which is where the breaker is formed, and then you want to see the retracement back up to the breaker, and then the fair value gap, and that is basically two confluences mixing together, which equal a unicorn model. So I'm sorry. Alright, so basically I have the accumulation, manipulation, and then the distribution with the midnight opening. So you want to use midnight opening to be more directional. You know, if you're bullish, you want to be buying below the midnight opening, and if you're bearish, you want to be buying above the midnight opening. So you can use that as a little indication as to where you can find your premium and discount zones. But you know, if you combine it with the accumulation, manipulation, and distribution power 3, that is probably as powerful as you can get for using it. What you're going to want to look for in power 3 is consolidation, manipulation, and then distribution, or you know, they call it AMD, accumulation, manipulation, then distribution. Whenever I like to find my accumulation, it's during Asia, and then my manipulation is probably during London, and then the distribution is probably during New York. So yeah, that's pretty much, you know, how to find the accumulation, manipulation, and distribution. How I use it, I try to use majority of my models and combine them together. This is kind of why I don't use one of them. I feel like if you limit yourself whenever you use one of them, I prefer to use every single one of them and connect them all together and use them and dissect them. I believe that's more powerful than anything, in my opinion. But yeah guys, that is pretty much it for the 3-day trade models. If y'all want me to go more in depth and have a live example, I probably will post that in the Discord. So if y'all want to join my Discord, link below, I'll probably make some quick edits and, you know, quick short little clips and showing me displaying the models. Feel free to join the Discord. I will answer any questions inside of there. That's kind of why I'm doing it too, you know, because we're more in depth about it. So yeah.